Now, the Reserve Bank has moved and in bold fashion wiped 50 basis points off the official cash rate, slashing it down to 2.5%. It's an inflation-busting move. Well, is it an inflation-busting move designed to turn the economy around? Let's take a look at what it means for your mortgage. David Cunningham is Squirrel CEO with us now. David, good morning.
Good morning.
The problem with inflation, of course, is that it's kind of a little bit high and getting touching cloth on the edge of their band, which is not a good thing. But in terms of mortgages, what do you think this is going to do?
Actually, it depends on two things. Firstly, it depends on what happens next, because wholesale markets, which sort of drive what mortgage rates are going to be, move in anticipation, and the market had been anticipating at least 0.25% drop, if not 0.5%. It got 0.5%, so rates fell slightly in the wholesale markets. And we'd already seen those mortgage rates come down to below 4.5%. So it's what happens next. So does the Reserve Bank go another 25 or indeed 50 points in November, which is what I'd argue for, to get us out of this funk we had in the economy? And secondly, and most importantly, what happens to term deposit rates? So that's what banks pay their retail customers for, 3 months, 6 months, 12 month terms. And that's sort of half of all banks' funding. So unless those fall, we're not going to see mortgage rates fall much further. So they've already fallen a fair bit. Yeah, the floating rate will come down, but everyone in New Zealand has fixed rates. So it's really dependent on primarily actually the term deposit rates, and secondly what the Reserve Bank does next, and then we'll know that in about 6 weeks. But good on them for finally doing it.
So if for people who are waiting and trying to game the system and waiting for them to get as low as possible, let's say they do 25, let's say they do 50 before Christmas, and then pause.
Yeah.
How much lower do you realistically could they go?
Yeah, look, I think assuming those term deposit rates fall, which is likely, it's just a gradual thing. So over the next couple of months till Christmas, I think we're probably going to see another 10 to 25 basis points. So that's up to 0.25% off those short-term mortgage rates. So you might see a one-year rate around 4.25. Beyond that, that's probably getting near the bottom. Will we get below 4% in this interest rate cycle? Possibly. It would require the Reserve Bank to cut by 0.5, which I'd strongly advocate for. We're only today or yesterday in stimulatory territory for interest rates. So, think about it. We've been in recession for the best part of 2 years, right? And we've had contractionary monetary policy settings.
We have.
Yeah, to fight inflation, but the Reserve Bank's overdone that, and I've been arguing that for 3 years now.
Now, what about the banks competing with one another?
Yeah.
How fiercely are they competing with one another at the moment for our money, for our debt?
For our debt? Well, oligopolies always end up with the same price. Look at petrol, look at any oligopoly, electricity, the market price ends up the same. And so, one moves, everyone follows. So, everyone's got pretty much the same interest rate. There are always little sort of sorties where there's sort of a bit of an attack, but everyone lands at the same point. So it's not about really competing based on interest rate. It's things like cashbacks. Banks are still giving you 0.8%, 1% if you change to their bank.
Yeah.
On a $500,000 mortgage, you get a $5,000 kicker. You might have to pay legal fees and that, but if you're just switching banks or getting your first mortgage, that's where you get the competition happening. But again, most banks are doing the same. So, yeah, it's...
All right, so you think at this point, at best, we might get down to 4.25, something like that for
yeah,
a year?
pre-Christmas, unless the Reserve Bank is bold and does another 0.5, which is what I've been advocating for a while. And then we should not be talking about mortgage rates. They should just sit there and we should get on with bloody growing this economy and getting cheerful for summer.
David, appreciate your enthusiasm this morning. Thanks for being on the show. David Cunningham, who's the Squirrel Chief Executive.